let's plunge into the exhilarating universe of financial markets. Have you ever imagined inverting the norms and forecasting real-world occurrences from market fluctuations? Fasten your seatbelts, because that's precisely what we're undertaking today. Over the past weeks, we've been poring over various markets in this channel, especially S&P 500, EURUSD, oil, gold, US interest rates. From our analysis, it appears there's a reasonable chance of certain events unfolding together, possibly simultaneously within the next 1 to 3 years. The events include a significant increase in the price of gold, steady US interest rates with a decreasing bias, a substantial rise in oil prices, a major decline in the US stock market, and a significant upward movement in the Forex pair, euro to US dollar. To understand what real-world events could trigger this scenario, we posed the question to a generative AI, Gemini. According to Gemini, the following could happen. Multiple crises could converge, including a major conflict in the Middle East disrupting global oil supplies, a large-scale cyber attack destabilizing critical infrastructure worldwide, and a sovereign debt default leading to a financial crisis and global recession. In this scenario, the combined crises would drive investors towards safe haven assets like gold, leading to a significant price increase. Central banks would initially pause interest rate hikes, eventually resuming with a decreasing bias. Oil production and transportation could be disrupted, causing a supply shortage and a spike in oil prices. The stock market would likely decline as businesses struggle and investor confidence plummets. Finally, the dollar might weaken due to the perceived vulnerability of the US economy, strengthening the euro in comparison. Furthermore, certain events would be unlikely in this scenario, such as a NATO-Russia war or a nuclear war in Europe, as these would likely damage the euro to US dollar pair contrary to our projections. This scenario is purely hypothetical and speculative. The specific timing, severity, and interconnectedness of these triggering events can't be predicted with certainty, nor can the exact movements of each asset class in this complex scenario. This information isn't financial advice, and consulting with a qualified professional is crucial before making any investment decisions. In conclusion, while it's impossible to predict future events with absolute certainty, analyzing financial markets to predict potential real-world events is kind of crazy but intriguing concept, because usually we think in the other direction, trying to predict finance by considering the world news and events. That's all for today. Happy trading.